to go about enhancing or improving the governance in the public sector. Let me begin by saying that public sector crisis is not just confined to Pakistan. Many of you, I know that we have a lot of issues, tremendous issues in Pakistan, but the issues are not confined to Pakistan. This is a global issue. We also know that after decades of privatization, for the last 20, 30 years, this has been the trend in every economy virtually, to privatize, privatize, privatize. Because public sector is not efficient, because of several issues in the public sector, it was thought that the best way to deal with public sector is to minimize it and to give the business in the hands of private sector. That to a large extent still remains true, and I think we all agree with that. But then we also saw the impact of global financial crisis in 2007, 2008. We saw that the best of the institutions which were known for the best governance, were swept away because of the greed in the private sector, because of the innovative, creative instruments, the subprime crisis, etc. I will not go into details, but we know that the Citibanks of this world and RBSs of this world, the largest of the financial institutions, were totally bankrupt. And US had to give, I think, $700 billion bailout first, and then another, I think, around similar amount to rescue them. The Fed had to issue, and the European banks have to issue, the central bank had to issue trillions of dollars worth of guarantees, and bailout packages came in all the mature economies. So as a result of global financial crisis, ladies and gentlemen, we saw a situation, a reversal of the trend of privatization, and we actually started we saw increase in public sector, because public sector intervened to rescue the private sector. And in the sense, today, as a result, for instance, the RBS, Royal Bank of Scotland, which used to be one of the largest UK bank, is 70% owned by the United Kingdom government, British government. So as a result of those rescue packages and guarantees, from 2007, the global debt increased from $23 trillion to $34 trillion, 48% in a matter of 3 years. So you can see the impact of global financial crisis. And now that we are hearing the sovereign debt crisis, I think part of the problem, rather major part of the problem, this sovereign debt crisis has resulted from the rescue packages and the huge, loans, borrowing that was done by the public sector to rescue the private sector. And as a result, we have now in Europe and the developed world a huge problem that public sector has become bankrupt, literally. Sovereign debt crisis, just as the global financial crisis was the result of greed and creative accounting or creative instruments, sovereign debt crisis is also, it highlights poor accountability, audit, financial management, and overall governance in public sector. And this is not just confined to Europe. As a result of, I've listed the third crisis, actually the real crisis is the balance sheet crisis, the sovereign balance sheet crisis. There is more to a government's financial position than sovereign debt, because sovereign balance sheet crisis is bigger than the sovereign debt crisis. And current indicators of public finance actually do not give the right indications or right picture unless you prepare the balance sheets. And that's why ICAP and accounting profession has been advocating for a long time that the government should go on accrual-based accounting, and they should prepare the balance sheets to really show what is the worth of the government and what is the real position, financial position of the government. This is the indebtedness of 8 mature economies that I have taken from, I think, partly from IMF and World Bank figures. 2010, you can see, Pakistan, we say that our debt to GDP ratio is around 60% and we have become highly indebted, 55, 60%. But look at US. 92% is the public debt, 92%. But if you include their household debt, the financial sector debt, and the corporate debt, the private debt, then the total debt to GDP ratio is 279%. Canada's public debt is 81%. The total debt to GDP ratio is 276%, and Japan 512%. Germany 278%, France 346%, UK 507%, Italy 314%, Spain 363%, and so on and so forth. I mean, I've just listed 8 of them, but this is the situation generally. So let's see the balance sheet situation. These are the countries which prepare balance sheets. I have not given you the details of the balance sheet, but I'm just giving you the bottom line. Australia, one of the sound economies, the liabilities are more than their assets by 53 billion. Canada, 519 billion Canadian dollars. UK is 1.2 trillion negative. France, 1.9 trillion. And US, the strongest economy in the world, $13 trillion as per their own balance sheet. If we prepare Pakistan's balance sheet, we have not done that exercise, but my guess is that we will not be that negative. Despite 60 years of mismanagement, the country is so sound. Unfortunately, we don't properly market it. We don't properly reflect the real assets. We have huge assets. We have debt, but there is no comparison with the mature economies and other economies. I have not given you that chart, but I looked at the current situation of Pakistan. What is the debt to GDP ratio of Pakistan compared to the rest of the countries? I can tell you it is not in the top 50. So that should give you some confidence. We say so much, there is so much cynicism and about Pakistan and negative thinking and perception. But when we compare ourselves, I think we have tremendous potential. And these are IFAC's recommendations to G20 coming from the sovereign debt and balance sheet crisis that I talked about. Sovereign debt crisis and related government debt issues potentially affecting many countries around the world have caused instability in the global financial system. They remain a significant threat to global financial stability and are a cause for major concern for the G20. These are recommendations to G20 for their meeting that is, I think, happening probably this month somewhere. The failure of fiscal management in the public sector is widespread and has an economic impact that far exceeds the impact of losses incurred by corporate failures in the first decade of this century. The crisis demonstrates that policies chosen to address the global financial crisis may inadvertently have changed the nature of the problem, moving it from the corporate to the government sector. As I said, that basically the corporate, the private sector, the global financial crisis has now caused the sovereign debt crisis and this balance sheet crisis. In fact, in its most recent insight report, Global Risks, the World Economic Forum, this survey was conducted and it noted that the current most significant global economic risk is the chronic fiscal imbalances. So I'll not go into, I think you can, I'll share this presentation with ICAP and it can be shared with you. So I'll not, but I'll go on